Hello everyone. Welcome to Manager's EDU. Today, I will teach you Days Sales Outstanding, which is also called Average Collection Period, and it is known as Accounts Receivable Turnover in days. In this lecture, we'll call it Days Sales Outstanding. Let's learn it with a practical example and deep concept. Days Sales Outstanding measures how efficiently a company collects payments from its customers after making a sale. For instance, let's say we have a company called ABC in the year 2023. This company sells goods on account, meaning customers pay later and the amount is recorded as accounts receivable. By using this formula, we can calculate how many days it takes on average to collect the payment. If the result of this formula is higher, it means the company is taking too long to collect payments, which is not sufficient or efficient. If the days sales outstanding is lower, it means the company has good and sufficient accounts receivable collection. Customers are paying quickly. Now, let's learn its formula. Days sales outstanding equals average accounts receivable divided by total credit sales multiplied by 365. Here, total credit sales means the sales we have made only on credit, not cash sales, and 365 represents the number of days in a year. But what is average accounts receivable? It is calculated as average accounts receivable equals beginning accounts receivable plus ending accounts receivable divided by 2. So, first we find the average and then we apply the main formula. Let's learn it with an example. Suppose for the year 2023 we have the following information. Beginning accounts receivable is $30,000. Ending accounts receivable is $40,000. Total credit sales for the year is $500,000. First, we calculate average accounts receivable. So, beginning accounts receivable $30,000 plus ending accounts receivable $40,000 equals $70,000. Now divide that by 2. So, $70,000 divided by 2 equals $35,000. Now we apply the days sales outstanding formula. Average accounts receivable, $35,000, divided by total credit sales, $500,000, equals 0.07. Then multiply 0.07 by 365. So, 0.07 multiplied by 365 equals 25.55 days. Therefore, the days sales outstanding in this example is 25.55 days. Now, let's understand what this means. 25.55 days means that, on average, the company collects its total credit sales every 25 to 26 days throughout the year. In simple words, after making a credit sale, the company receives the payment approximately every 26 days throughout the year. So, it's a very easy and powerful formula to understand how quickly a company gets paid by its customers. If you didn't fully get it, watch this video again and you will understand. Thanks for watching.